All right, so in a market where Wall Street are relentlessly, brutally destroying your small, your mid, your large caps. I mean, look at the 1 day relative performance, okay? They wanted nothing to do with large caps, micro, mid. Look at small caps, guys. Irrespective of business performance, I know we just had Q3 earnings recently, and most of these small caps, okay, say most of the small caps in my portfolio, at least, have crushed Q3 earnings. Absolutely crushed it. But Wall Street wanted none of it. Absolutely sold off on all of these small and mid cap stocks. And it's just been brutal. I mean, if you have any small or mid or large caps in your portfolio, you probably had a rough day on Friday or a great day, depending on how you want to look at it. Like I said, I'm more of a contrarian. So for me, my great companies just got discounted. So I'm absolutely fine with it. But if you look at it over the week, again, all they've been doing is buying mega caps. You know, your Nvidias setting new all-time highs, your Apples setting all-time highs, your Microsofts. I mean, you name it. All of the megas have pretty much been running ragged. They've been absolutely crushing every other capitalization stock on the market. And that's just pretty much the way of the market. So in a market like this, I feel like it's time we go back to our roots. Okay, so I want to share some lessons from Sir John Templeton, and this is right out of the book Richer, Wiser, Happier. So I've told you guys about this book a couple of months ago, finished it, great book, but I'm going back to it and just looking at some of my notes from prior. So looking at some of the notes that I highlighted just to remind myself of the bigger picture, because it's so easy to get caught up in the noise, you know, all of the panic, all of the fear, you know, Jerome Powell, is he going to be nominated by Joe Biden or is he going to go with Lyle, the lady? Who's going to be the next leader? We have just no idea. There's just so much noise. You've also got the US debt ceiling coming back up because, of course, in October, we essentially kicked the can down the road. So we're going into December. That's going to be another fear that's going to rise up again. And, you know, you have Evergrande. I think Evergrande have defaulted again. It's crazy. There's just so much noise in the market. And sometimes it's good to just bury your head back in the books and learn from the people who have been there before us and have succeeded. So I'm going to share some lessons that I learned from Sir John Templeton. And then I'm going to show you 2 stocks that I plan on buying this week, which are getting discounted right now. Probably 3. Maybe I'll share 3 stocks with you. So if you get any value, please make sure you smash that like button. With that said, let's dive into it. So this was in the chapter, let me pull it up for you guys. So this was in the chapter, The Willingness to Be Lonely. Okay, so I believe it's chapter 2 in the book. Definitely get this book. The link's in the description below. Amazon affiliate link. But yeah, so The Willingness to Be Lonely. Now, it was given his principles to succeeding in the market. And he said, fourth, said Templeton, successful investing requires patience. When he bought US stocks at the outbreak of World War II, he knew how cheap they were, but he couldn't predict how long it would take for the market to agree with him. And let's just fast forward to today. You know, you've got many high quality small to mid cap stocks trading at a price to sales of 1 or 2. It's getting ridiculous right now how cheap these stocks are getting. And again, it's all fear. You know, Wall Street are parking their cash in mega caps right now. You know, in this high inflationary environment, interest rates are most likely going to go up. You know, they're just parking their cash in megas, keeping safe, whilst heavily selling off and discounted your small and mid cap stocks. So they're getting cheap. Okay, no argument. Small and mid caps are getting incredibly cheap right now. But the question is, just like Templeton said, he can't predict how long it will take for the market to agree with him that they were cheap. And in this instance, we don't know how long the market is going to continue to discount companies like OPENDOOR, like HIMS, like OPAD, like Alibaba, like many companies that we speak about on this channel quite regularly. We don't know how long this is going to last. But you just have to be prepared. Like, yo, you know, a lot of people are hoping that it will be done, you know, by next year. It might not be done by next year. And then what? You know, are you going to sell? You just got to be patient. All right. So his edge lay not just in superior insight, but in his willingness to wait year after painful year for the situation to play out as he predicted. This is investing, guys. You know, he waited. He was willing to wait year after painful year for the situation to play out, and before Wall Street agreed with him that, yo, these stocks are heavily discounted. So Templeton's affection for maths reinforced his conviction that patience pays. To illustrate this, he mentioned the tale of Dutch immigrants buying Manhattan for $24 in 1626. If the Native American sellers had invested this Desiree sum at 8% a year, he said, they would have enormously more than the total value of Manhattan today, including all buildings. Templeton regarded this as an extreme example of a fundamental financial principle, and it's this: in order to have a really good investment result, all you need is patience. That's it. That's all you need. He warned almost all investors are too impatient. Time and time again, we've got all of these people who have successfully beaten the market over a long period of time tell us patience is the key. That's it. I mean, you've got the likes of Warren Buffett in his shareholder letters say, like, look, the stock market is a device for transferring money from the impatient to the patient. Okay. Time is the friend of the wonderful business, the enemy of the mediocre. And that's facts. You know, we've got to invest in businesses that we believe over the long term will continue to produce result after result after result. Why? Because just like Templeton says, we don't know how long this can go on, you know, and a lot of companies, they start off great, but their growth starts to slow. And, you know, we're starting to see hints of that in the likes of Tattooed Chef. I mean, they started out very, very strong. But if you've noticed now over the last 2 quarters, you know, the growth is starting to slow a little bit. And you have to ask the question, is Tattooed Chef still a wonderful business? And can it stand the test of time whereby Wall Street continues to discount it? Will their growth rate continue to slow significantly? That's the question we have to ask ourselves. So bear this in mind going into this week and probably even next year, that John Templeton's edge wasn't his superior insight, but it was in his willingness to wait year after painful year for the situation to play out as he predicted. So with that said, the first company that I want to buy more of going into this week is Airbnb. We absolutely crushed Q3. Just take a look at this income statement. Okay, so revenue for the prior year period was 1.3 billion. Okay, and they spent, cost of revenue was 227 million. Now, fast forward to this quarter, they pretty much added another billion, right, to their top line. But look, they only spent less than 100 million more in terms of cost of revenue. Fantastic. This is absolutely what you want to see. It shows consumer demand. It also shows good allocation of capital from Brian Chesky and also the management team at Airbnb. And again, one of the reasons why I invested in Airbnb going forward, because I said travel is picking up. And travel is picking up as we speak, especially when you compare it to last year. It's night and day, all right? So we're seeing customer demand pick up. We're seeing management are not spending that much more money in terms of a year-over-year period. I mean, less than 100 grand. And that generated over more than 1 billion to our top line. Fantastic. And of course, if you go to our bottom line, our net income in the prior year period was 219 million. But look at that. We almost reached 1 billion of net income. Absolutely amazing company. And if you think the income statement is impressive, let's take a look at the balance sheet, because the balance sheet is also equally impressive. So our cash position also grew from the prior year period. We're at 5.4 billion. We're now sitting on 5.9 billion in terms of cash. But look at our total current assets, okay? We added another 4 billion, or just shy of 4 billion to our total current assets. Okay, so now sitting at 12.2 billion versus our total current liabilities, which is half of that. Well, just over half. That's 6.5 billion. So that means within the next 12 months, Airbnb is more than comfortable. Okay, their cash pretty much nearly covers the total current liabilities, which is absolutely insane. This is an incredibly strong balance sheet. And if you look at our stockholder equity as well, that's almost nearly doubled as well from the prior year period. So that means that the assets are growing exponentially faster than the liabilities. A very, very strong balance sheet. If you look at our stock-based compensation expense, I think that's probably where a lot of people might ding Airbnb. There's a lot of people that don't like stock-based compensation. So that's gone up quite significantly from the 9 months ending this quarter versus last year. So again, I'm sure a lot of people might ding Airbnb for that purpose or for that reason. But for me personally, I'm not too bothered. You know, it seems it's in line with how it used to be prior. So let me pull up my Airbnb position. So at the moment, I have 150 shares and my cost basis or my average price is $163. And that's me averaging up. So I started buying Airbnb at $144. You know, Peter Lynch is a great advocate for watering your flowers and not cutting your weeds. Where a lot of investors, they pretty much water their weeds and cut their flowers. So I'm trying to water my flower. Airbnb is a great flower in my portfolio. Airbnb and AMD have been crushing it. I started purchasing Airbnb at $144, so around this dip here. And I've just been adding to it with each quarterly performance. The more they continue to crush it in each quarter and the more the stock pulls back significantly, and buying the dips, and I'm averaging up. I have 150 shares. But I mean, after Q3, I'm thinking to probably get this to 200 shares. Okay. So if we see any weakness in the stock, I would love to get another 50 shares, and I might just phase it in. I might just, currently we're at support now at $195. It might be a good idea to probably put in maybe 20 or 25. And if we pull back to this support here at $181, then I can add another 25 shares, get my position to 200 shares, and just wait for Q4. This is a company that I'm happy to add to on great performances. So another position of mine that has been absolutely destroyed after Q3 has been Celsius Holdings. Ticker symbol is CELH. Now, the reason why this company got destroyed wasn't because of earnings. Okay, earnings was very strong. I think we grew our top line by over 150% year over year. Fantastic. Okay, we're in hyper growth mode right now. We have just arrived at the expansion phase of our S curve, and man, this company, don't sleep on Celsius. I know a lot of people are talking about valuations. I think using a PE ratio to measure or value a hyper-growth company such as Celsius, I think is the wrong thing to do. Value investors, please don't get offended. That's just the way I like to invest. You know, I look at the growth opportunity, not necessarily the PE ratio on a super growth company at the beginning of its expansion phase. When Celsius eventually begins to mature, then I will look at PE ratios, but I don't use PE ratios in circumstances like this. You might agree, you might disagree. It's entirely up to you. At the end of the day, it's your investment decision. I'm just sharing with you what I'm investing in. Okay, so Celsius had a great Q3. However, the reason why we have dropped, let's pull it up actually. So we have now dropped 34%, yeah, about 34% of our highs, and it's as a direct result of this. Okay, so I shared it with my Discord. I said, okay, some Celsius related news just flashed up on the Bloomberg terminal, and it was this came out last week. So Celsius Holdings discloses SEC subpoena for fact-finding inquiry. Okay, so this flashed up on the Friday, I believe it was, yeah, on the 13th of November. And I mean, the stock absolutely went bananas. Okay, this was what was mentioned in the 10Q. It was a non-public fact-finding inquiry by the SEC to determine whether violations of the federal securities laws have occurred. Okay, and also part of that, if you look at the legal proceedings of the document, it dates back to March 2009. This person is trying to claim against the use of preservatives, or the claims of no preservatives versus them being preservatives. It's been ongoing for over 2 years. You can see the date here. And now the SEC has issued a subpoena. Okay. Now, John Fieldy, who is the CEO, was recently in a Jefferies conference. Okay. Tattoo Chef did one as well. But he was on there and he was asked to comment essentially about this, and this was his commentary. I shared it with my Discord as well.
Yeah, Kevin, I mean, we did receive a subpoena from the SEC. It seems to be a general inquiry. The company is fully cooperating. It is confidential, so we're not able to talk about the specifics of it, unfortunately, but I can assure you the company is fully cooperating. We're going to go through this and hopefully get some resolution to this fairly quickly. As I can say, we feel it will not affect our current operations, our future operations, and the opportunities that we see ahead of us with the company. So I think that's demonstrated as well in our Q3 financials and some of the highlights that we're going to talk about as we go forward. But
okay, so that was John Fieldy's commentary on the question about the subpoena. Obviously, for legal reasons, he couldn't go into any information. But one thing I shared in my Discord, I put it in bold here, was what he said here. We feel it will not affect our current operations, future operations, and the opportunities that we see ahead of us with the company. And that's all I needed to hear, okay? This current situation surrounding the company, in my opinion, is a short-term issue. Now, look, it's not financial advice. I could be entirely wrong, but me being the contrarian investor that I am, I smell opportunity, okay? I smell opportunity in this blood right now. My average in Celsius is $56. So I plan to average up on this weakness. You can see we've broken through multiple levels of support using the Fibonacci extension tool. We recently broke through 74 on the closing on Friday. And yeah, this is num time for me. This is num time for me. I'm sitting on about 625 shares. I plan to probably get this up to maybe 700 shares. If it continues to get discounted lower, I'm going to build it up to 1,000 shares and just hold for the long term, because this is an absolute growth beast that I'm bullish on long term. So that's all I have for you in this video today. Those are the 2 stocks that are on my watch list going into this next trading week. Remember, the lessons from Sir John Templeton is patience. Okay, we just need to be patient. We need to ride it out. How long is this going to go on for? I don't know. But remember, we have to just be patient for year after painful year. And yeah, that's how we will beat Wall Street in the long term. So thank you so much for watching. If you get any value, please make sure you smash that like button. If you're new to the channel, hit that subscribe button and the notification bell if you want to see more content from me. Also, if you want to join my Discord group, the Patreon link is in the description below. So thank you for your time, and I'll catch you in the next one. Peace.